Hi guys, welcome back to Muthukumar's Talk. In this video, we are going to talk about secondary markets. So what is a secondary market? To understand the secondary market, we need to know about the primary market. So first I will give you a brief explanation about primary market. So what is a primary market? So a company needs some money to raise capital, so they are going to a stock market and issuing their shares to the public, and they are raising their fund for their expansions and other purpose. So if you are willing to buy that stock or that share, people will subscribe that company in lots, they will buy it. So on the trading day, when it is listed in the stock exchange, they can sell it. So in primary markets, the seller is the company which is going to be listed in the market, and the buyer is the public, mutual funds, FIIs. So be clear that in primary market, the investors will only buy, they cannot sell. So investors means I am saying the retail investors. So retail investors can buy in the IPO, but they cannot sell in the primary market. So now I think you have got an idea about primary market. So secondary market is the market where securities are traded after the IPO and its listing in the stock markets. So sorry, not stock markets, in the stock exchanges. Okay. So after it's getting listed in the stock exchange, the investors and the traders will buy the stocks, and they can even sell the stocks also. So what is the main core objective of secondary markets? So if I bought a share in a lot size of 100, if I am buying the stock of say XYZ company, I'm having some emergencies, so I need money, so I need to sell the shares immediately, and I need to make the shares, and by selling it I need to make money. So because of certain situations which I have, so what should I do? If it is not listed in the secondary market, so where will I sell? So here secondary market plays a major role for us. So we can sell our stocks through broker in an exchange. We will put a sell order, so there will be some other buyers, so we will be a seller, so some other will buy our stock. So I am having 100 shares, someone may need 100 shares of that XYZ company. So secondary is a market is a market where buyers and sellers come to buy and sell their stocks. So now in this scenario, I am going to sell my stock worth of 100 shares which I have. I am going to sell it. I am going to place the order in the exchange book. So I will sell it, some other person will buy it. So stock in secondary market will play as a stock exchange will play as an intermediary. So through secondary market we can buy and sell stocks. So what happens? We are getting liquidity. So the important thing in an investment is liquidity. If we cannot if it is not having a good liquidity, we cannot make money immediately. So if you are investing somewhere, you should need to make money within a week or within 2 days, within a short span of time. Then only the investment is worth, because we are in our life we will have a lot of risk, or a lot of lot of scenarios which we cannot imagine. So in order to tackle it, we need to have good liquidity, so that when you are investing, you can take back your money immediately. So secondary market is playing a major important role in liquidity. So after getting listed, the stocks will be traded between the investors. So in IPO, the company is giving the shares to the public, but in secondary markets, stocks are exchanged between the investors and the public. So the scenario which I said was, I am selling my share, some other public want that same share, so my share is being given to him. So already existing shares are being traded in the stock markets in the secondary market. So in stock markets, there are two markets. One is primary and another is secondary markets. So in primary market, stocks will be given to the public for the first time. But in secondary market, stocks are being traded within the public. So here the company is not involved. So if you need to buy a share, you can buy through secondary markets. If you need to sell the share, you can sell through secondary markets. So what are the things Muthukumar is traded in secondary market? You can trade stocks, bonds, debentures, ETF, and then F&O, futures and option, which we are going to do in my further videos. I will concentrate on derivatives. F&O is also called as derivatives. So I will concentrate on derivatives also. Then ETFs. So these are the things which are being traded in the secondary markets. So next, secondary market is also called as aftermarket. So majority of trading is happening in the secondary markets, because when the company is giving to the public, you cannot trade. After it get listed in the market, you can trade between the investors. So this is one of the most important markets in the world. So if you want to be an investor, secondary markets will play a major role, because if a company is going for a public issue, once it is going for a primary market, but for a long span of time it is in the secondary market. Once the company is being listed in the stock exchange, it is secondary market. Before its listing, the creation of that security and giving it to the public, that during that IPO period alone, it is primary market. After it gets listed in stock markets, in the secondary market, it is secondary market only. So secondary market is one of the most important market, guys. I hope I have answered the question of what is secondary market. If this video was useful, please like, share, subscribe to Muthukumar Stock. If you are having any suggestions or feedback, please put it in the comment box, because it will be useful for me in order to develop my video quality or otherwise develop my fluency. If you are having any grievances, please post it, guys. Then only if you are posting it, only I know. So then only I can correct. So your feedbacks are welcome in Muthukumar Stock channel. So please support, guys. Thank you.